Welcome to the analysis report by FinancialMirror.tv. The US Senate put off a vote on President Barack Obama's economic stimulus package until at least today, after lawmakers failed to agree on how to cut the more than $900 billion package. Senate Majority Leader Harry Reid, facing demands from a bipartisan group of lawmakers for more than $50 billion in cuts, postponed work on the plan until today. As he pushed for a vote on the bill, he also said work on it might continue until the weekend. Democrats, who control 58 seats in the chamber, would need the backing of some Republicans to get the 60 votes necessary to end debate on the bill. Passage of the US stimulus plan could lead stock markets higher. The S&P 500 index is currently lying just below downtrend line resistance at 851.70 and has the potential to break higher. On Thursday, the S&P 500 closed at 845.65 points. Analysts told FinancialMirror.tv that the US non-farm payroll figures and unemployment numbers for January will not have a major impact on sentiment, unless they are off expectations. Non-farm payrolls are forecast at minus 530,000, while the unemployment rate is forecast at 7.5%. In the currency market, sterling is seen continuing its upward march and now targets a move to 1.4900 to 1.4980. Analysts, however, say this is a technical move and the UK's problems are far from over. The Bank of England cut rates by 50 basis points to 1% to stimulate the economy. But any optimism generated by the better-than-expected UK house price data from Halifax and the recent stabilisation of the UK PMI is misplaced. The Bank of England statement continues to provide a very downbeat assessment, noting that consumer spending remains weak. The global economy is in the throes of a severe synchronized downturn, and there will be a further sharp drop in output in the early part of the year, similar to that seen in last year's fourth quarter. The Bank of England also noted that credit conditions have tightened further. We shall be waiting for extreme rallies to short the sterling. The euro, meanwhile, remains weak against the dollar following the decision of the ECB to leave rates unchanged. Analysts at BNP Paribas suggest selling the euro into rallies towards 1.30. Thanks for watching FinancialMirror.tv.